Okay? So our discussion again for today is about the performance evaluation techniques provided on responsibility accounting na chapter. There are three performance evaluation techniques that I will discuss for today. We have the return on investments, the residual income, and the economic value added. Pag sinabi po nating return on investment in evaluating performance, it is referred to the performance measure used to evaluate the efficiency or profitability of an investment or compare the efficiency of a number of different investments. And return on investment tries to directly measure the amount of return on a particular investment relative to the investment cost. Take note, no, that return on investment from the definition provided, again, it will provide a measure as to the amount of return on a particular investment. If the return on investment is much higher than what we are expecting, meaning that, okay, we have no effectively and efficiently performed in achieving the desired or above the desired profit. Okay. On residual income naman, in managerial accounting, it defines residual income in a corporate setting as the amount of leftover operating profit after paying all costs used to generate the revenues. It is also considered the company's net operating income or the amount of profit that exceeds its required rate of return. From the second sentence, no, we can easily identify or determine how residual income is being computed. Because sabi naman dyan, it is the company's net operating income or amount of profit that exceeds the required rate of return or the desired return or the desired income. Residual income is typically used, no? Okay, for to assess the performance of a capital investment, okay, team, department, or business unit. So, again, no, if we're going to use the residual income, we can able to assess the performance of the capital investment, okay, or of a particular business unit. If the residual income happen to be in a positive figure, meaning it exceeds the desired rate of return or desired income, it means that the company was able to perform well on achieving its targeted income. Okay? So, yon, that is residual income. And then we have the last performance evaluation tool or technique, that is the economic value added. Economic value added is the incremental difference in the rate of return over a company's cost of capital. Incremental difference. Ibig sabihin, okay, no, it is the difference, no, between the cost of capital and the rate of return in an incremental manner. Essentially, it is used to measure the value a company generates from funds invested in it. Okay. The rule on economic value added provides that if a company's EVA or economic value added is negative, it means the company is not generating value from the funds invested into the business. Ibig sabihin, our investment na ibinigay, if the EVA is negative, hindi po bumabalik. Okay? Kasi we have a negative economic value added. Conversely, a positive economic value added shows a company is producing okay, from the funds invested in it. Ibig sabihin, if the economic value added happen to be in a positive figure, it means that our investment is returning and the return goes beyond the investment that we have. That is economic value added. Ngayon, how are we going to apply the concepts of return on investments, the residual income, and economic value added? Okay, so I prepare here illustrative exercises to compute for the residual income, return on investments, and economic value added. Okay, so first illustrative exercise. The Bulat division of ABC Corporation is classified as an investment center. Okay. For the month of November, it had the following operating statistics. Okay. Sales for 675,000 pesos. And then we have a cost of goods sold, for 400,000 pesos, and operating expenses for the month of November for around 327,500. Then we have a total assets of 750,000, and the weighted average cost of capital, okay, is 4%. ABC Corporation's average stockholders' equity is 300,000 pesos. It is subject to an income tax rate of 40%. Okay, based on the problem, we are required to compute for the division's return on investment and for the division residual income. So let us begin computing the return on investment of the said division using the given information. Take note that the formula for return on investment is simply the operating income dividing it to investments or asset. Using the formula provided on computing the return on investment, we can say that the operating income, okay, the operating income is referred here to be the sales minus, okay, cost of goods sold minus the operating expenses. Okay, that would be our sales, guys, ha? Okay, that would be 675, okay, 675,000, okay, minus the cost of goods sold of 400,000 minus the 237,500. Therefore, the income tax rate of 40% will never affect on the computation of the return on investment because we are targeting here to compute the operating income. Meaning, the operating income that we are referring here is the operating income before any taxes deducted. Okay? And then, the investments or assets will be our denominator in determining the return on investment. Based on the given problem, the investment or asset happened to be 750,000 pesos. Using that, we can able now to compute the what we call this, the return on investment. 675 minus 400 minus 237,500, that will be how much? That would be, computin nga natin, that would be 675, okay? We have 675,000 minus 400,000 minus 237,500, okay? We have around 37,500 na operating income. Okay, that would be our operating income. And then our total assets is 750,000. Okay, so dividing 337,500 to 750,000, we can now able to compute the return on investment. So our return on investment will be how much? That would be 37,500 divided by 750,000, that is 5 or 5%. Okay. Sir, ano po ba ang implication ng 5%? Now, we can able to interpret the 5%. Take note that the expected or the average cost of capital is 4%, 'di ba? Using the cost of capital, that would be our expected or desired rate of return. That is 4%. Considering that we can, based on the actual operating income that we have, and dividing that actual operating income to the total assets that we have, we were able to compute the 5% return on investment. Comparing 4% to 5%, we can now say that we have performed well, no? Based on the evaluation technique that we use, or using the return on investment, we can say that the company or the division in particular able to perform efficiently because it goes beyond to the desired rate of return of 4%. And yung 4% na po yun is coming from the weighted average cost of capital provided in the problem. Okay? Ayon. Okay. Ganun po tayo mag-evaluate, ha? Okay? The figure will be worthless if we cannot able to interpret that figure. Okay? Ganon. That is the return on investment. Okay. And on the residual income naman, a very basic and simple tool on assessing, no, the performance of a particular division, business unit, or company. Because the formula for residual income is simply getting the difference of actual income and actual income and the desired income. Okay? Okay, yun po yung pagka yung difference lang ng, or yun lang po yung computation of the residual income. Getting the difference between the actual income and the residual income. Tanong, what is the actual income, no? The actual income is equivalent also to the operating income that we have computed kanina in computing the return on investment. So here, the actual income that we have is 37,500. Okay? Ngayon, yung kailangan po natin mahanap is the desired income. How are we going to compute for the desired income? The desired income is simply computing, no, the computing using the weighted average cost of capital, kasi the weighted average cost of capital is the desired rate of return, and multiplying that desired rate of return to the total investment that we have or the total assets that we have, no? Based on the problem, the desired rate of return is 4%. That is the weighted average cost of capital. Take note, that is the weighted average cost of capital, and the total assets based on the problem amounting to 750,000 pesos. So to determine what amount of income we desire for the said division, we simply multiply 4% to 750,000, and that is amounting to, okay, 30,000 pesos. Because we were able to compute already our desired income, we can now, okay, differentiate the actual income to the desired income that we have computed pa lang. That is 37 minus 30,000. Okay, the residual income that we have is 7,500 pesos. This will be our residual income. Okay, how are we going to interpret the residual income that we have computed? Take note, if the residual income is positive, it means that we go beyond to our targeted income. So meaning, we go beyond to the expectations that we set. So if we go beyond to the expectation that we set for the said division, ibig sabihin naging agresibo, naging effective, naging efficient tayo on managing the operations of the said division. If naging negative yon, we weren't able to target the desired income, it means that the performance of the said division is not efficient. Okay? The the manager of said division wasn't able to provide the effective and efficient management procedures on that particular division. Okay? Yun po yung purpose, why residual income and return on investment is very much important on evaluating, okay, the performance of our investment. Okay, so hopefully naintindihan po what is residual income and return on investment. Okay? Return on investment and residual income in relation to performance evaluation. Because again ito in relation to performance evaluation lang kasi we have return on investment and residual income in a manner na on personal finance, on accounting naman na interpretation of FS, okay, no? Ito, in relation to on the evaluation of the performance of a particular division. Okay, so let's proceed to the next illustrative exercise that I have prepared. And the next illustrative exercise that I prepared is for the computation of the economic value added. Okay, so let me read to you the um the the problem wherein we are required to compute for the economic value added. The following year end, okay, no? The following year end, okay, data pertain to Minerva Corporation. The book value and the fair value for each line item of the said data is provided. For the current assets, we have 800,000 pesos book value. So the assumption there that the book value and the fair value is at the same amount. And then we have non-current assets of 3,200,000. Okay? At its book value. Okay? And its fair value, obviously, kasi walang nakalagay, it is assumed to be na the book value and the fair value is at the same figure. And then we have current liabilities of 400,000 pesos without the fair value. So, ibig sabihin that the book value and the fair value of the said liability is pareho din. And then we have non-current liabilities amounting to 1 million pesos at its book value, and the fair value is also the same. Okay? And then we have the shareholders' equity at its book value amounting to 2,600,000 pesos, and its fair value is 3 million pesos. Okay? And during the year, the company earned income before interest and taxes of 800,000 pesos. Take note, the income here is before any interest and taxes of 800,000 pesos. It pays income tax at the rate of 25%, okay, each year. And the cost of equity capital is 12%. Okay, take note. The cost of equity capital is 12%. Okay. Based on the given data, we are required to compute for the economic value added. Okay. So, to compute for the economic value added, the formula for the economic value added is simply the difference of the net income after tax and the desired return on investment. Okay? Again, ha, the simplified formula on determining the economic value added is the net income after tax less the desired return on investment, wherein the desired return on investment shall be based on the weighted average cost of capital. Take note, again, ha, the desired return on investment shall be based on the weighted average cost of capital. The cost of equity capital provided in the problem does not pertain, guys, no, to the weighted average cost of capital. Instead, that the cost of equity capital of 12% just only pertain to the weight of equity portion of the balance sheet. That is the weight, no? That is the cost of capital for that particular um, equity section. So how are we going to compute for the weighted average cost of capital? Take note, no, that the weighted average cost of capital in this problem is not provided. So we need to determine first how much or what is the value of the weighted average cost of capital. So the weighted average cost of capital is based on the different sources of funds, okay, of the company. Take note that those different sources of funds of the company is coming from the non-current liability and the equity. Okay, we have the non-current liability, okay, generally, generally, that the sources of funds of the company of or a certain division usually happen to be at the non-current liability section and the equity section. Kasi ito naman po yung mga accounts have connected to financing activities. So our source of funds always nandyan po sa account na yan. The non-current liability and the equity. Okay. No, we have the equity. Okay. From this, we can say that the cost of capital, okay, to each source of fund, to each source of fund, the source of capital for the equity, sabi sa problem, that is 12%. Okay? Klaro po yun, no, na ibinigay sa problem that the cost of capital for the equity portion is 12%. However, the non-current liability does not provided you what is the cost of capital. Pero, provided in the information, meron po tayong pwedeng pagkunan ng cost of capital. That is simply the 8% interest, no? 8% interest on the non-current liability, then we need to deduct less what? Less the tax. Tax imputed, no? Tax, no? Attached to that 8%. So we need to deduct the tax. Take note, the tax rate is 25%. So we need to multiply this by 75% because the 75% of 8% is the interest rate net of tax. Okay? So we need to disregard, to eliminate the tax, no, from the 8%. Kaya nga minomultiply ko 75% to 8% kasi from the 100%, babawasan po natin ng tax rate na 25%. So 75% only of the 8% is the actual cost of capital for the non-current liability. And that is 0.06 or simply 6%. Okay? And then after that, guys, okay, no, we will determine the weight, okay, the ratio, no, the ratio. Okay, magkano from the 6% will be part of the weighted average cost capital and magkano from the 12% cost of capital of the equity will be part of the weighted average cost of capital. Paano po natin gagawa ng ratio yon? Dapat proportional based on its fair market value. Based on fair market value. Take note that the fair market value of the current non-current liability is 1 million, okay, and the current the fair market value of the equity is 4 million. So therefore, I mean 3 million pala yung fair market value of the equity. So masasabi natin that the ratio is 1:3, no? 1:3. So to determine the weight, we can now able to determine the weighted cost for each item, the weighted cost, no? Okay, that would be 6% times 1/4. Bakit 1/4? Kasi 1:3 nga ang ratio, 1 plus 3 is 4. So 1/4 of the 6%, that is the weighted cost for the non-current liability. And to determine the weighted cost for the 12%, that is 12% times 3 over 4. So we have 0.09. Okay, gawin po natin itong percentage para mahanap po natin kung magkano yung weighted average cost of capital. So the weighted average cost of capital, by adding the two weighted costs that we have determined, the weighted average cost of capital is 10.5%. From that, we can now able to determine the desired rate of investment. Okay? So, yun muna ha. Kunin muna natin yung weighted average cost of capital. Sir, what if the problem clearly expressly provided already, no? The weighted average cost of capital. Should I need to review, to recheck the weighted average cost of capital? For the purpose, no, of making sure that the weighted average cost of capital provided in the problem is accurate, it's better to compute. Pero if we have limited time already in answering the board question, because take note, the board exam is a time pressured examination, let us trust that the weighted average cost of capital provided in the problem is the accurate weighted average cost of capital. Kasi if it happen naman na mali yung binigay nilang weighted average cost of capital, it can be considered bonus, no? Okay, pero kung mahaba-haba pa ang oras, pwede naman po natin i-review at i-check muna if the weighted average cost of capital provided in the problem is correct and accurate, no? If kaya natin mahanap, no, at ma-check ang weighted average cost of capital. Kasi it will depend naman on the given information. So, let's now proceed to, no, in determining the economic value added. So, we have able to determine the weighted average cost of capital, which we are going to use that later on in determining the desired return on investment. Unahin po natin paano ko computen po yung net income after tax. Take note that the net income of the company according to the problem is the net income of the company is 800,000 pesos. Okay, that is 800,000 pesos. So the net income will be 800,000 pesos. Multiply it simply to 75%. Okay, no? 75%. So the net income after tax is around magkano? We have 600,000 pesos. Okay, ganun lang, no? We just deduct the 25% of 800,000, okay, which is 200,000. So 200,000 less 800,000, we can now able to determine that the net income after tax is 600,000 pesos. Okay, so sunod naman po natin kunin is the desired return on investment. I mean, return on investment, okay, on peso, okay, that would be, paano po natin yung kukumputin, okay, that would be, Teka lang, kunin po natin muna yung total assets of the company. Okay? Total assets of the company. Take note, the total assets of the company, magkano kaya yung total assets of the company? We have 800 plus 3,200,000. The total asset of the company is 400,000 pesos. Okay? That is 400,000 pesos. Okay? We have 400,000 pesos, and then we need to deduct the total current liabilities. Okay, current liabilities lang guys ha. Okay, liabilities, so that we can able to determine the total investment that we have. That non-current liability, considering that is a source of fund, no, it is a source of fund, okay, it can be considered as an investment on the part of the company. Okay? So, the total current liabilities of the company is 400,000 pesos. So, by deducting 4 million to 400,000 pesos, the total investment, okay, the total investment of the company is 3,600,000 pesos. From the total investment, we can now able to determine the desired return on income, okay, on investment, I mean on pesos, okay, by simply multiplying the 10.5% weighted average cost of capital, okay, so that is 3,600,000 times 10.5. So the desired return on investment on pesos is 378,000. By getting the difference, no, of 600 and 378,000, we can now able to determine the economic value added amounting to 222,000. Okay. So, ano ang implication nito na 222,000? Considering that we have a positive figure, okay, ibig sabihin that we were able to, okay, no, to get, no, returns from the investments that we have. Kasi pag naging negative po ang economic value added, doon magkakaroon po tayo ng problema, because on the assessment that we have, we can say that wala pong nangyayaring maganda on the investments or the funds that we have invested on the said company. Okay? So, yun po ang ibig sabihin ng economic value added. Once again, no, on the performance evaluation technique, we have three, and all of them has the same objective: to evaluate the efficiency and profitability of an investment. And those techniques are the return on investment, the residual income, and the economic value added.